It was a busy day for me today in the stock market. I bought 4 stocks today, including a new one in Kenvue. So I wanted to get a video out giving you my Kenvue valuation and also telling you which positions I added to. Welcome to the Stock Sale Flyer. My name is Aaron. None of this is financial advice and it's all time sensitive. Let's get into it. So you can see here some of Kenvue's priority brands, what they call their priority brands. I'm sure you're familiar with a lot of them like Band-Aid and Listerine and Tylenol and Motrin, Benadryl, Zarbee's, Aveeno. You can see the names here. This is a company that has a lot of well-known brands. It was spun off from Johnson&Johnson back in 2022. And as you can see, the stock has not done great since back in 2022. But I think it's at a level now where it can present some good value. It might not be the biggest growth stock on the planet, but I think that it does provide some good value to a portfolio, at least for me. And it was recently, just as a piece of news, announced that Johnson&Johnson was going to exit the Kenvue company and sell its remaining stake. So that is a piece of news that is worth being familiar with that came out recently. Let's get right into the valuation today. So you can see the revenue estimate I have from Ticker for the 2024 fiscal year. It seemed in line with Kenvue's guidance from the Q1 2024 earnings release. They guided 1 to 3% full year sales growth in that earnings release. So this would be in line with that. And then you can see the Ticker revenue estimate I have for the 2025 fiscal year. I then took the average of the revenue growth rate from the 2023 fiscal year, 2024 expected and 2025 expected, and then carried that revenue growth rate of 2.76% forward for the next 3 fiscal years out to the 2028 fiscal year. That seemed like a reasonable estimate. I don't expect massive revenue growth from this company, but I do think they'll have some steady growth. In terms of the net income margin, there was some costs in 2023 that seem to be related to the spinoff from Johnson&Johnson. You can see I put a note in here from the 10K, and you can go ahead and pause or take a closer look at that. But basically, long story short, I don't expect the net income margin to regularly be as low as it was in the 2023 fiscal year. It seems like they'll be more in line with around 14%. Based on what's expected for 2024 and 2025 fiscal years. I didn't put a note in, but I think that this estimate I used was either from Ticker or it was the middle of the guidance or they've lined up together. I think they might have lined up together, and that's why I went with $1.15 a share times the shares outstanding number I have here. That came from the Q1 2024 10Q. And the next year I used, I believe, the Ticker estimate for earnings per share multiplied by that number. And so you can see what that would result in for a net income margin if there's not a change in the shares outstanding there. So I figured 14% seemed like a reasonable amount, especially considering what they had for 2022 fiscal year. So I went forward with 14% as a net income margin. In terms of the free cash flow, I went with the Ticker estimate here for the 2024 fiscal year, and then the 2025 fiscal year, I did the same thing. I think this 98.9% is probably more reasonable for what to expect for a free cash flow to net income going forward into the remaining years. So I carried that forward as well. I don't know if the free cash flow here in 2024 is expected to be lower because of, again, some costs related to the spinoff or what it may be. But for a business like this, I thought, having free cash flow being pretty in line with the net income seemed pretty reasonable. So that 98.9% is what I went forward with there. You can see the inputs I have for my weighted average cost of capital, which is then my discount rate. I do believe for this fiscal year, they guided higher for the effective tax rate, but I calculated this, I think, based on the last 10K. A lot of the time, that's what I like to do with the numbers to calculate this is use the last fiscal year's 10K. So you can see I get a fair value of equity of $20.76. Kenvue closed today at $18.63. And with a 10% margin of safety, you can see that you would be pretty close to that number right now based on my valuation. Again, not financial advice, but my average is $18.85, and I'm comfortable with that. Again, You look out to 2028 after the 2028 fiscal year, if there's no change in the shares outstanding I used here, which I think there probably will be because I'm assuming there'll probably be some buybacks, but you can see with a P of 20, it would be $25.74. And then with a P of 25, it would be $32.18. I think, trading in the low 20s is reasonable for this company. I think it does have moat. I think that people will be willing to pay for that moat, even though, it's not a necessarily high growth company. I see it as one that will compound. You're going to get your dividends. You're going to probably see them buy back stock. So to me, not the most big, flashy, high growth company out there, but as something I want to own maybe forever. I was really happy to pick this up at these prices, and it's just going to be something that I own for a really long time, most likely. The stocks I added to again today as well. So I added to my position in Molson Coors. I think this stock is an absolute great buy right now. I think it's one of the best buys I've found in the stock market recently. I really like the divergence in the RSI right now as well. And I think that shows that things may be starting to turn in the other direction. I can't predict the future, but I'm really happy with my average price. I've been averaging this stock, and I am comfortable adding more to the position because, again, I think this is really a great buy. Again, not financial advice, but I think this is just a really good value. I also added to my position in Anheuser Busch InBev today, and I added to my position in the Kraft Heinz company today, which I also think is primed for a turnaround story potentially. I know they were kicking around maybe selling the Oscar Mayer brand. Couldn't find where they break down, their specific brands and the revenues for each brand anywhere. So it's hard for me to tell whether that Oscar Mayer sale would really be overall good for the company or not. That's a piece of recent news that came out, is that they're exploring potentially selling that. I don't know if they will or not, but I thought, having this in the video be worth noting that for you. But I still think that for the long term, the Kraft Heinz company is a company that has a potential to be a turnaround story. And so I added to my position in the company today. If you missed any of those other videos, go ahead and check those out. Everything's time sensitive. So things that go into like the weighted average cost of capital, some of those inputs change a little bit. But I do still think, Molson Coors, Anheuser-Busch InBev, and Kraft Heinz are all good value buys right now in the stock market. And that's why I added to my positions in those stocks today. Not financial advice as always, but those are the 4 stocks that I bought today. Thanks again, as always. Follow me on X at Stock Sale Flyer. Like, subscribe, click the bell to get the updates. Share the content if you're enjoying it. I really appreciate it. Make sure you check out the PayPal valuation I did over the weekend as well. If you haven't watched that yet, that stock did great today. I'm excited for the direction that seems to be headed. As always, thanks for being here. Drop a comment. Let's have some conversations about what's going on in the markets. Take care.